dropped. This latest drop down to 2%. There is the idea that took a lot of people by surprise. A lot of predictions were that interest rates were going to remain on hold, and then interest rates went down. Of course, that, as you indicate, may be showing forth the preparation of expectation that things could be particularly tough this coming year economically.
Yes, exactly. A lot of places around the world are trying to deflate their currency. So Australia have seen their currency go down. Other countries are trying to make their currencies or devalue their currency with the idea of making their products and services cheaper, but everyone's doing a bit of a race to the bottom at the moment, and there's only so far that can work. When you're relating that to interest rates, in the US, interest rates are close to 0% in terms of the central bank settings, but they're looking at increasing interest rates in the future. So it'll be interesting to see how things go in the future for Australia, but the more consensus view is that we'll be at these lower rates before we start to move into the upward swing.
What does it mean, Gavin, when you've got lowering commodity prices? You mentioned that our dollar has been dropping, and it's at a much lower level than it was just 12 months ago. What sort of effect does it have on interest rates when you've got these changing elements of our own financial environment in our economy?
Yeah, it's interesting, the rate cut, because it met expectations just within the few weeks before the announcement. We saw the share market bounce a little bit. We got a bit of a rise in the share market, and I guess it's meeting expectations. Even though it's an indicator that things aren't so well, it means that the cost of borrowing for business has reduced, and it can increase profitability for businesses. And so we saw a bit of a bounce in the share market. But the challenge for Australia is relating to commodities, as they have significantly reduced after the mining boom, and we're seeing a lot less revenue come in on the commodity side, which is a large part of our exports. That's not being replaced by the other parts of the economy at the moment. So that's the challenge for Australia. The rest of the economy stepping up to take the place of the reduced revenue on the commodity side.
And of course, this all has ramifications nationwide. When commodity prices are low, of course, we're not earning. There isn't that revenue stream that's coming in from the mining boom anymore. And of course, this dominates a lot of the headlines when we start to hear about the economy and the government and the opposition arguing with one another over what ought to be done. These things are very significant. Does this cause us to actually be fearful then about taking advantage of the good things in a low interest rate environment? What are your thoughts perhaps on the short, medium and longer term as to what sort of risk we ought to be thinking about taking?
Yes, I guess I come from the point of view that we shouldn't live in a fearful state, and that we, I guess, go back to those foundations that we will be provided for, and we just need to be good stewards, as you mentioned at the start of the discussion, that as long as we do those things, that we will be provided for. So I encourage people to live not in a state of fear, but confidently knowing that they're doing the right thing. But the challenge is to make sure that you don't go into too much debt, that you don't spend more than you earn, just getting back to those basics, but can you continue to move forward confidently, not live in a fearful manner.
Let's talk about business for a few moments, because while we might be thinking about people who own houses or are potential homeowners borrowing and having a mortgage, the idea of owning a business, these sorts of things are very important if you're thinking of having some borrowings to expand your business, when in fact there are elements of the economy that make it a very sort of oftentimes unsafe environment to be thinking about expansion. Yeah,
exactly. Borrowing to expand your business is a common thing to do. Often in Australia, though, with business, particularly smaller business and expanding them, often the debt they really like to secure against property anyway. So it's very much linked. It's where there's business borrowings that's not linked to any property, where there's a higher level of risk, and you need to be a little bit more careful. But definitely it will. Hopefully, the aim is with lower interest rates that it will stimulate business growth and people to be prepared to take risks to go out there and grow and develop businesses, and that's the ideal scenario. But whether that has that outcome is another thing.